Every time you analyze a trade, price gets into your zone and then disrespect it and go against you. So in this video, I'm going to show you the exact way you can analyze a trade in order to get perfect entry for good profits. You can use this exact strategy that I'm about to show you in order to make profit also from the market. To analyze a trade, firstly, you need to identify your trend. You can see from this point, price was on a downtrend. And for this one right here, price was on an uptrend. So it means that if we're trading, we should be looking for sell opportunities inside this zone. And for this zone right here, we should be looking for buy opportunities. Price fell downward, broke this higher low right here, and then that means that price is now back to a downtrend. We can start looking for sell opportunities once again. So since we're now on a downtrend and we're looking for sell opportunities, we need to mark out our supply zone. So if price is in a downtrend, just like this, we have a zone at this point. So this is our supply zone, this is our supply zone. So it means that if price comes back to this zone, price should sell, or if price comes out to this zone, price should sell, whichever it is. Take for example, price comes back to this point, you look for a sell opportunity and then you sell it downward, thereby breaking this level right here and continuing the downtrend. Do you understand? The next thing we need to do is mark out our zone from this higher high downward to this point. So if there's any zone within from this point upward to this point, we are supposed to mark it. The last candlestick before momentum downward. So we have one at this point, we have another at this point right here, the candlestick before the momentum downward. Then we have another at this point. There's a candlestick at this point before this long momentum downward. For these zones, we can't use this and use this, and here is why. Price already came back and entered into our supply zone and then pushed downward. Okay, so this particular supply zone is not valid. For the second supply zone, which is this one above here, price pushed upward, got into this point and then pushed downward. So the supply zone has been tested already, so it means that it is no longer valid. So we will delete them. So this particular supply zone is still valid because price is yet to enter into this particular point. If price comes back into this supply zone, we are going to sell the trade downward. So the next thing we need to do is adjust our zone, either make it smaller using our lower time frame or make it bigger. Make sure that you have a proper zone. You can see that we have a long wick that was formed after the candlestick before this long wick. There is a wick above it, so we need to cover this wick. Next thing we're going to do is we're going to go to our lower time frame and then adjust it again. Now on our H4 time frame, the previous time frame was our day 1 time frame. You can see there's a green candlestick before impulse downward. We're going to adjust our zone to cover this particular candlestick at this point, down to this point, just like that. So if you look closely, there is imbalance at this point right here. Imbalance is simply the space between the wick of the first candlestick of our supply zone and then the third candlestick. If you look closely, you're going to see that there is this space between those places. So that is imbalance. And when you see imbalance close to supply zone, it makes the supply zone a strong zone, which means that price should go back, clear imbalance, and then make the zone efficient, get into our zone, and then price should push downward. You can see that price got to our supply zone and pushed back downward. If I was going to take this trade, I would not take it. Do you know why? Because price has not gotten into the zone. Price needs to get inside the zone and close with a candlestick inside the zone. Price got inside our zone and closed. We can now start looking for our entry. Price went downward, hit our TP, and then even went as far as giving us 6.62 risk to reward ratio. So this is exactly how you can analyze your trade in order to get good entries, just exactly as I did right now. Make sure you subscribe to this YouTube channel for more videos like this. Don't forget to like this video and also drop a comment if you have any questions, and I'll try to make a video in order to explain to you.